G'day everyone, welcome back to Pete's Investing. Today is April 20, 2023. This is a spot gold price update. Pretty much on the daily and the 4 hourly, we're in an upswing on the CCI 1500 with a moving average 400. But on the hourly, you'll notice we've broken to the downside. Is this the start of a bit of a retracement or a correction to the gold price? Because it's had a nice little rally, if you look there on the daily. So it may well start breaking to the downside. Let's drill down to each of these. So we've had a nice rally back here since November 22, and it's had a bit of a movement up here to the upside. And it was, and I put this resistance here at 2047, and it's bounced off that resistance. And if I draw out there, you can see those tops there, and this key support area at 1809. So at the moment, we're sort of just pulling back a bit from that resistance, and we may see further declines. But let's just drill down on the 4 hour first. And I've drawn a Fibonacci on that range between that support resistance. You can see there also drawn this diagonal ascending trend line and this other diagonal ascending trend line. So it was initially in this range. And the reason for that is it normally gravitates around these trend lines, and it may well come up and start moving to the upside on that trend line, possibly. Alternatively, if it breaks much lower than that, we've got to look out for this key area and the 60%, 61% Fibonacci retracement. At the moment, it's broken. It's halfway between the 23% and the 38% Fibonacci. So last update, we had it sitting around the 23%. And since that last update, it's dropped a bit below that. So we're just going to be mindful. It keeps dropping a lot more than that. Then we're going to be looking at potential, a larger retracement, possibly down around the 50 or even 61%. On the hour chart, again, I've got a couple of things to show you here. On the CCI first off, it is definitely broken to the downside. You can see it there more convincingly, and in that little range there, it is in a bit of a bearish move. So again, that's the bigger time frame we were looking at on the daily, 1809 support and resistance at 2047. Now I've got a couple of Fibonacci's here. This first one is just to demonstrate the 61% level, so from between that low and that high. You can see there it bounced off the 61% level, and it went further to the upside. So that's what we want to see on the daily. And I'll go back to the day, or to the 4 hour actually, demonstrate it. So again, if it bounces off this 61% potentially, or even the 38 or 50%, we may see it further move to the upside. So that's what we want to see if you want to go bullish on gold. But on the hour chart as well, I've drawn this separate range between that low and that high, and that's 100% level there. So that shows you there, it's broken well below the 61%. Now it has broken above it again, but it tested it twice. So, and that the second time it went deeper. That's not a good move. We want to see it definitely break and advance further. But you can see there it's made lower lows and lower highs as well, which is again another negative sign, or positive sign for bearishness, but negative sign if you want to go long. So again, just careful about trading this in a long direction, even though the daily and the 4 hourly are showing more bullish momentum, and we're still a ways off from collapsing, I'd say, but just be mindful about going long and carefully going long. I'd wait for this to more positively move to the upside on the hourly before taking long positions. So to understand how to properly trade using the average down approach, if you've been caught out, reference the links in the description below. Subscribe and like us on Patreon for more support. Thanks for watching, and see you in a future video.